All right, welcome everybody. We've done a sound check, we've done visual, but now that we are live, we want to make sure that the sound check is still sounding good and that the visual is still good. We are currently February 19th, and it is 2020, February 19th, 2020. Important day in my life, actually, so kind of funny. We're doing a presentation today. We have a lot going on and a bunch of questions, so let's just get running right in it. What is PUG Users Group? The PUG Group is a users group designed to help us answer questions in regards to the TradeStation platform. And this is a forum where people have sent in questions in regards to the John Person programs on TradeStation. So if you were thinking that this was the event for Thinkorswim, it is not, and I do apologize if there was confusion, but that's what the PUG group is. Person's user group is for the TradeStation forum platform. And if you're interested, you can stick around. We still give out some, I think, some pretty decent information. We do have some questions that I think everyone can sink their teeth into a little bit regarding trading. And then if you have any questions that you didn't send in by email, take this opportunity now, start typing in your questions, and then we'll get to those. All right. So as a general rule, do let me point out that trading does involve a risk of loss. So I just thought I'd let everyone know that, and then eventually we'll update this slide to reflect 2020 and not 2018. But again, this is an important disclosure. For those that are not familiar with people that don't do risk disclosure statements, I probably shouldn't say this on an open recorded mic, but it's a fact of life. Some of you may be familiar with a company called Online Trading Academy. It seems that the fine folks over there were trying to teach people for the low price of $50,000 on how to trade, guaranteeing a source of income, targeting elderly people. And according to the SEC, that's particularly frowned upon because they just got shut down. So it's important that you understand that there is no guarantees, and you really probably don't want to use the word guarantee when it comes to trading. Anyway, that's just my experience being a trader, an owner of a brokerage firm, and been in the business for 40 years. Why? Because you kind of have to have a little honesty and integrity. But I'm sure everyone will be hearing more and more about that news with the fact that in just 6 little years, they collected $370 million teaching people how to guarantee make money. Apparently, not everyone made money. All right. So what's new? The VIP is a membership for TradeStation. The annual membership is only $11.29. It comes with all types of indicators. We have the volume, the person volume indicator. It's a momentum indicator based on percent changes. We have the PMC indicator of relative strength, the trilogy scans, the last additional change bullish and bearish radar screen, high and low close doji radar screen, and we added, it's not new, but we added a breadth indicator, and it's not particularly if you're not familiar with this, because this is one of the questions, what good is it? And first off, if you're not familiar with it, what good is it? It's called the JP MIC oscillator because it is not my formula. It is Sherman McClellan's oscillator, the McClellan oscillator. But the McClellan oscillator, some people like it, some people don't. What is it? It's an oscillator that takes a moving average approach to advanced decline. And the advanced decline work is based off the New York Stock Exchange Composite Index. If I ask a question, how many of you are trading? It's a trick question, so don't answer it. None of us are trading the NYSE. We're trading either the Qs, we're trading the spiders, we're trading the Dow, we're trading the Russell, but we're certainly not trading the NYSE. Sherman McClellan, back in the 70s, with his wife Marion, if my memory serves correct, and I had the privilege of speaking at the in Sharm el Sheikh, that's in Egypt, as the keynote speaker presenter for the IFTA, which is the International Federation of Technical Analysis Society. And I had the privilege of meeting Sherman. And what his concept was to look at the deterioration over time of the advanced decline or the breadth of the market. So all I've done is I didn't really rip off his work, but I used his formula and we applied it in TradeStation to the individual indexes that we utilize. And so therefore we have this huge divergence between performances in the market right now, between the Q's up almost 11.5% year to date, the SPY, and then again, if you take a look at where the NYSE is, it's barely up, I think, 1% this year. So kind of a big difference in performance figures of the market. So we may at times find ourselves in trouble if we use an indicator that is doing what? Measuring, and I just want to bring this into space so that we have, as of Friday, the S&Ps were up 4.93%. Now today's Wednesday, so we got to add yesterday at today's market. The NASDAQ 100 up 10%, and there the NYSE up 0.63%. So just as a case in point, why did I come up with the idea of using, if McClellan oscillator, and I use the breadth analysis, if we're trading the SPY or you're trading the Qs, we want to know if there's relative strength in that, and if more stocks are going up rather than like a cap weighted or an equal weighted ETF, we want to find out, is this rally on a broad-based rally in that segment of the market? Because I certainly don't want to look at the information in the NYSE, which may show weakening structure, and try to apply it to trading the S&P and the NASDAQ. That was the concept, and that's why it's titled aptly, it's JP, but it's the McClellan oscillator. So if you don't have it, you should as a VIP member, and these are the instructions. Otherwise, send us an email and we'll help you load that and figure out how to use that. All right. Now, if we go over to, if I'm not mistaken, this is the page where I have the McClellan oscillator, but as you'll notice, it says JP McClellan oscillator. What does that mean? This is the McClellan oscillator formula, but the McClellan oscillator here is based off the information on the S&P 500. So that's the big difference, and so we can utilize that data to help us trade, or at least get a truer sense of the market. So this is the actual page that everyone should have with the John Person indicator package. And then when you have this, you have, obviously, you can also throw in any indicator you want and use a relative comparative analysis between volume, histogram, volume, on balance volume, and again, the PUG group or the VIP users volume indicator. So what you get out of this picture is, while the advanced decline comparative ratio line, which we created in the S&Ps, we first created it using Trade Navigator in 2000, and it was actually, to be truthful, November 2008. It launched on Trade Navigator at the beginning of 2009. And that was my work with Pete Killman, which we made available in Genesis. At the time, people thought I was nuts. It was just redundant. Why did we need that? And I said, because I'm not trading the NYSE, and that goes a long way. I mean, if you think about it, in recent history, it's not that long ago. In actual history, according to my gray hair, that was 11 years ago, man. That's an awful long time. So it has been a very good friend of mine in the market to determine the strength of the movement of the market, and looking at the, not just the comparative ratio line, and this is what that is. It assigns the difference between the advancers and the decliners. And that's why in our live trading room, in the algo room, we have a breakdown of the advanced decline and using the spider on a 5-minute basis so that we could look at the trend of the advanced decline as a breakdown. This, by the way, today, interesting component of the market, just on a side note, today's new high breakout in the SPY was a new high close, was not confirmed by a new high in the advanced decline reading yet, but we will have to wait to see tomorrow what it looks like. The advanced decline analysis looking at the McClellan oscillator. And that's what the subject matter is, because this was the question. We have several questions, and I'm just going to go through them with you right now and discuss the validity and the nature of the McClellan oscillator with the John Person touch. And the John Person touch is just simply, we're using the McClellan oscillator. We fudged a little bit with the moving averages because we have less stocks. There's 500 stocks versus 1,800 stocks in the NYSE. So we can't have the same kind of readings, and yet we do realize and recognize and try to teach you the patterns that exist are very important with using the McClellan oscillator. So let me just tell you the value of the McClellan oscillator. First, it is a leading indicator. Unfortunately for some, it's so leading, people feel it does not work, and that is true. It works best under 4 different scenarios. A, it gives you an idea of when a market is overbought and when the market is oversold. It also has a zero line component. It gives buy signals when it breaches above the zero line from an oversold condition. And the reverse is true for sell signals. So if I bring in, and you can go back and check out throughout history, its validity. Is it 100%? No, but it does give us a lot of great signals in time. One of the greatest signals that I like is convergence patterns. When a market makes newer lows and the oscillator does not, it helps to identify a potential key reversal in the market. Now, would that be kind of a concept of potential double bottoms? Yes. So if you see a rise in the McClellan oscillator after a double bottom and you have a person's pivot PPS buy signal, it helps to confirm that there is strength in the market. Third way I like to use for confirmation, if volume confirms that signal. And for my volume indicator, either a moving average hook, or more importantly, as the market is making a newer low, if the indicator momentum is making higher lows, showing relative weakness in that volume, it means that the market is selling off on relatively light volume. And if you're bearish, that's not a very good sign. If you're bullish, it's an exciting sign. And so at this point in time, and I'll just tell you what the tea leaves are reading right now, the indicator is showing a condition of bearish divergence. What does that mean? It's meaning, while it's not as a sell signal that's very, very, very new second, it's showing that the market's proceeding high in price. There was a dip. The market has gone up and made a new price higher high. The McClellan oscillator, or the JP McClellan oscillator, has not confirmed this high because we have not made a newer high in the market. If this generates a sell signal after a secondary higher high with a bearish divergence type of pattern in the McClellan oscillator, it will be typically a very strong sell signal. So when a price sell signal does come, then under the condition of a bearish divergence in the McClellan oscillator pattern, that would be a very strong sell signal. So for VIP PUG members who have this tool, you need to know how to use it, number one, where to find it, number two. So if you do not have it, you do have it if you're a VIP member, just go to Insert Analysis Technique. Wait for the wheels to stop spinning. And then when you go up to McClellan oscillator, should be loaded on your files. It's JP McClellan oscillator, and just hit insert. I'm not going to do it because it's already there. So that was the validity of question number one. I hope that answered that question, and one can review. How do you use this tool? Again, overbought, oversold readings, zero line crossover, bullish convergence, bearish convergence, positive and negative, whichever way you want to talk about them. You can also look at momentum. There's another pattern which I've taught in many courses. It's called a zero line reject, but that's just another way of expressing if a market makes a low and comes back up and tests the zero line and rejects and doesn't cross back through the zero line like it did over here, you could see that while the market did go up a little bit, the zero line was rejected. The market went down. The zero line acted as resistance. That is a very strong sell signal. Now, I didn't just invent that, and I'm not just cherry picking that particular signal, but this was a pattern where the market went up on newer highs. The McClellan oscillator was in a divergence pattern, and then we started to get sell signal. And, quite frankly, that was a pretty strong, significant downturn in the market. And that was last August. We haven't had one of those doohickeys in quite some time, but needless to say, the market currently is under, just pointing to that you can see this, the market is under a McClellan oscillator divergent pattern. All right, moving onward and forward. Let's take a look at the McClellan oscillator as it relates to just actually the, if I may, the NYSE. And the NYSE, if I may be so bold, trying to load this up for you. This is the advanced decline on the NYSE. So if you watch CNBC, Fox, or any of them, even Thinkorswim, and I do bring this into the fold because Thinkorswim has, by default, almost every platform has the advanced decline comparative ratio line on the NYSE. So this is the NYSE New York Stock Exchange Composite Index. This is the one that's only up less than 1% on the year, has not made a newer high, and is lagging relative to the other market indices, meaning it just hasn't moved up and it hasn't taken out or made a new yearly high in 2020. So now let's go and insert, if we may, format, let's see, insert analysis technique. So whether you're using TradeStation or whether you're using Thinkorswim, the McClellan oscillator exists for everyone to see. Now, I'm not going to put the JP McClellan oscillator. I'm just going to look for McClellan oscillator, so it should be alphabetical, and let's see what happens. And there it is, McClellan oscillator. So if we hit OK, it is pre-programmed for the NYSE data already, so you don't have to do any special fiddling with the advance and the decline and create your own indicator, which is really interesting here because as you can see, and I'm the only thing that's different about this is I'm not sure if the oversold reading on TradeStation, and we're going to format if you would like, whether or not you want to. If you go over here to color, let's go with green for support. And I don't like any of those green colors, so let's hit other. I like that one so I can see it better. I'm going to hit OK. I'm going to go to style. I'm going to make the line slightly thicker. I'm going to hit OK. And now I'm going to go over here. I'm going to format this line. And I'm going to make it, let's see, a little bit wider. I'm going to color, and I'm going to make it red. And you'll see why in a minute. I'm also going over to general, or excuse me, input. And let's see, overbought is not 70. Overbought should be closer to about 150. All right. And then oversold should be closer to about negative a little bit less than 170. I go 160 on that, a little bit more, because markets go down a lot further and faster than markets go up, and oversold conditions tend to last a little bit longer. So I have a bigger number, generally speaking, and this is something that I just gave as a, I hope everyone heard that. And so there we have, and then finally, one last line we should put in and insert a line. We could do it several different ways, but I'm going to do it just by cheating, and I'm going to go a horizontal line here, and I'm going to put it in the zero line. I'm going to format that, and I'm going to make that, if it hurries for us, let's see, labels. Do I want labels? The data, where do I want that? I want this. Boy, that font couldn't get any smaller, could it? You should have this at 0. It's set at -$2. But anyway, change that to 0 if you'd like. And I'm style. Let's go with, I'm going to change that to electric blue, and I'm going to change the weight to a little bit more so I can see the darn thing. And let's just hit OK. All right. So what did I do? I now can clearly see a 0 line reject. If the market gets oversold, it comes back up and it hits the 0 line and rejects. It doesn't tell me to buy. It's a 0 line reject, right? And until the market crosses back and closes back above the 0 line, do we get a buy signal? All right, so the McClellan oscillator is an interesting picture as well, because it is giving a slight, and it's a slight different picture than the S&Ps. Why? Because today, the McClellan oscillator on the NYSE closed below the 0 line. And if really you're bullish, and you hear about the market going up every single day, that's not very positive. So in the terms of breadth of the market, we have a major disconnect, let's call it divergence between indexes. It seems everything that's money flow going into one segment of the market seems to be related to technology and utilities is the big talk right now. So in any event, this, if that's the case, you may get a different picture of the health of the overall market, and that's where the McClellan oscillator comes into play. So if you're trading the S&P and the Qs off of the data from the NYSE, probably aren't going to get a true picture. It may give you a distinct difference opinion in the marketplace. Now, I'm going to go over to the Qs, and I'm going to go to just insert analysis technique. And I'm going to put in JP McClellan oscillator. Now, if you notice over here, if you say, well, John, is it the same as the S&P? I mean, what's the difference? Look at the reading today of the McClellan oscillator. It's 3.11 on the Qs. It's 2.3 on the spiders. In the NASDAQ, or excuse me, the New York Stock Exchange Composite Index, you can see it's -1429, right? So no, it has been programmed, and with TradeStation, this is giving you the last number here. Let me roll it all the way to the right. There we go. As you can see, we have a negative reading in the oscillator. It's below the 0 line. So you can visually see what the actual reading is, and you know when you set this up with good eyesight and you set it at 0, you know that the market is at a 0. It's below the 0 line. So let's look at if you notice with the McClellan oscillator, JP McClellan oscillator, it has already been programmed. When you click on it, this is programmed to be on the NASDAQ 100. And as you can see, it is above the 0 line because it's registering 3.11. There's only 100 stocks here, so you can't have the same resistance reading of 160, 150 as you do in the NYSE versus the support. You can see that the readings are substantially different, right? 15. Overbought in this condition is more like 9 to 10. Oversold is more like 10 to 12. And so when a market gets significantly oversold like it did last August, and I'm just picking on August because that was probably one of the more pronounced sell-offs that we've gotten in this market. In over the long-term trend, here's another, I would have to just point out to you why people are not a big fan of the McClellan oscillator, because it may give too early of a signal. It's not a bad signal. It's just maybe too early and may cause people to get out of their trades too soon. One of the most powerful thing about the McClellan oscillator is to look for markets and divergences and convergences. So in our experience, we've had multiple major, and you know, not that I'm saying that every trade I make is right. That by a long shot, that ain't true. But we've had some really amazing, great calls. Not because we do the opposite of what the news says, even though it seems that can be true sometimes, but because the indicators have helped us out. Now I'm trying to show you this little doohickey here, which I don't know why I'm on the calling things doohickeys, but here we go. I was trying to get this trend line here and to share with you as the market was kind of like back here in October making a new low, and everyone was saying this market's no good. The McClellan oscillator had a small convergence pattern. And a lot of times you see markets like as we did a year ago, markets, and just wanted to point out to you the importance of this is that when a market makes a new price low, and let me format the trend line. That would be a problem. It's not showing up very well because the trend line was predisposed to be black. So that's not going to show up on a black background. All right, I should have hit default. Darn it. All right, let's do it now. Format trend line. Set as default. And hit OK. Wonderful. So let's take a look one more time. And we're going to go to trend line. Notice that, would you agree with me that when the market made a low, it rallies, and you'll probably notice that it's right around the recovery of again, same concept, a zero line. So let's go over to another drawing one more time. Let's go to a vertical line and set this up. And let's just put it at about, oops, I meant horizontal. Don't do as I say, just do as I do, or something of that nature. All right, so I'm just trying to speed this up. You could set that at a zero line. So if you notice that when the market goes back up and it taps a zero line, here's a market, it trades down, it zaps up, and it's at the zero line. The market does not clear. That would be a zero line reject pattern. So again, I'm not giving did not intend this to be a complete class on using the McClellan oscillator, but you'll get the idea of how powerful this really can be in time. And one of these days, believe me, we will be needing this tool. And in fact, as you can see here, it's not like it gives a signal once every 5 years. It actually does help at important turning points, and that's the key. So at this juncture, when you see a market making a newer low and everyone says jump out the window and throw all your stocks out and throw the baby in the bathwater, if the McClellan oscillator is in a bullish convergence pattern, that is a very strong buy signal. When also associated with an uptick in volume when it starts to get in a reversal mode. So bullish convergence patterns are very powerful, and oversold extremes and overbought extremes are also very useful for this tool. When it comes to the Qs right now in the NASDAQ 100, the question would be, well, what is the current reading of the market condition? After all, we have made a new high breakout. We've been breaking out every single day. What is the condition of the market? Ironically, while the advanced decline is also broken out and made, the advanced decline comp ratio line has also broken out to new highs, there is a cause for warning, and the warning sense is that over time, the market in the advanced decline McClellan oscillator data, while it is above the zero line, is in a divergence formation. This, unfortunately, could last a long time before it generates a quality sell signal. And what would a quality sell signal be? The market trades after a divergence and breaks the zero line and rejects the zero line. That's when you get a quality sell signal. So we are in a kind of a shorter term pattern, meaning it hasn't been as long as it's been in past cycles, but it is a warning that the market is vulnerable for when a sell signal is generated, it is under a condition of bearish divergence, which would mean that when this thing does have a sell off, it's not going to be of a small 1 or 2%. It's going to be probably a bigger, maybe 3 to 5% type of a decline. So that's where the McClellan oscillator throughout history has been an extremely powerful tool for those who know how to use it right. They know the relative strengths and the weaknesses. Now, in the last decade or so, people have lost faith in the McClellan oscillator because they're using the data and the McClellan oscillator based off NYSE. Now, when you also hear the term of the tick, and people like to look at the tick and the trend and the ARMS index, well, that is data. The ARMS index is based off of data from the NYSE. You most likely are not trading the NYSE. In old school, the theory was all the markets moved in tandem. Old school theory, I said. Old school theory was that the markets moved in tandem. As you can see, NASDAQ right now, this ain't old school, baby. This is all new education for most of us, right? So while we are seeing S&Ps breaking out to new yearly, annual, all-time highs and the Qs, there's again a slight divergence within other sectors, and not all indexes are created equal, and they're not moving like they used to in history. The NYSE has a double top in the market. The diamonds did not break out as well. That's the Dow Jones Industrial Average. And as far as the NASDAQ composite reading, a lot of people look at the NASDAQ composite or the TRIN, and that you can find the NASDAQ composite oscillator, and that's on Thinkorswim. I want to give you a warning right now. I generally do not look at trades and look at the condition of the NASDAQ composite and its breadth, even though people say right now it is a divergent situation. It has not gone up and made a new high, and that is a true statement. Why do I not even bother looking at this? Because first off, the NASDAQ composite is like a revolving door. Stocks come in, stocks go out, they get listed, they get delisted, and that's why I'm not a big fan of trusting anything of any breadth readings on the NASDAQ composite. I hope that made that perfectly clear for everybody. All right. So for the VIP group and for the Persons user group, what was the practical purpose of developing this tool? It was because that I do believe in that the stock indexes are very important in all of our trading, number one, and yet we were seeing massive divergences in how and where and what we trade. And the difference is that things are not created equally anymore. And lastly, the NYSE is 65% weighted towards interest rate sensitive stocks. Number one, REITs, preferred stocks, et cetera, bond funds, munici funds, things of that nature. And guess what? It ain't based on Apple, Tesla, and a few other host of others like Microsoft. So there is a big difference in what we trade and what these indexes are weighted towards. All right, I hope that answered that particular question in that email. And I spent a little bit more time there. This is a really good recording. I really hope you guys got some value out of that, because again, there will be a time when we stop trading viscerally in the marketplace, which means emotionally. Is the market right now, in anyone's opinion, when you look at the rationality based on valuations? And I know there's always an argument, and there's people talking about the only place to be right now is in stocks at any price. Put your money in stocks at any price. And I have a problem buying like a Microsoft at around 190 with the 33 PE, 34 PE. I have a problem of buying anything that has that type of high valuation, because throughout my history, I always found if you think there's not a better opportunity, wait a couple weeks. I'm sure you'll find one. So momentum traders, hey, this is your ideal. They're passing out 1% and 2% in stocks like every hour. It's amazing. Even today in our own trade room, we came up with a couple intraday trades like in almost everything. Beyond Meat. What were some of the other ones that we posted for you guys? CF Industries was another one. Our scans came up with all kinds of neat trades today regarding stocks. So it was pretty cool. All right. Now, let's move on to other questions. If that covered that, I hope it did, because that's the purpose and my intent. So next question is, hi, I was hoping John might answer a couple algo questions. All right, so let's answer a couple algo questions. What is the algo? Algo is a different product. It's the Algo Optimizer. The Algo Optimizer, for those that aren't familiar, is a program, if I may format analysis strategy, here we go. This is a program that we created, and as you can see, this is 17 Extreme version 18. So that means we've had 17 versions plus 18 of those, so I'm not really quite sure how many different updates and versions we've had, but basically you can program when you start, when you end, multiple start and end times, like the open up to noon, and then take trades from, say, 1 o'clock to 4 o'clock. Or if you're trading futures, you could trade the European session and stop it. You could have exit end of the day. You have other ways to program the market: position calculation, a minimum $100,000, a position risk amount, or position size amount. You can, if you're trading commodities, you could have it anywhere from a minimum of 2 lots is what I would suggest. You could build a strategy. You can define maximum trade loss and maximum take profit. So the question has to do with this subject right here under money management. And the question is, when setting start and stop time, should I always be in Eastern and not adjusted for other time zones? You can actually change the time zone to exchange time, which is by default in TradeStation. If you live in Montana or if you're in Hawaii, you don't remember where the CME, E-mini, S&P futures are traded. That is Central Time, right? Because the CME is in Chicago. You can change it to local time or exchange time. If you know that the U.S. stock market is based in New York City, and that's on Eastern time, and TradeStation allows you to change whatever you want, however you want, in the different time zones. All right, so that I just wanted to make sure that we have what time of day. And secondly, frequently, I have a gain on the algo only to see it give it up and then get stopped on a loss. What settings can help lock that gain in? Well, 2 things. Number 1, if you understand what's called the average true range of a futures market, if we're starting to see, and you read your performance and it says the average profit is 300, 400, whatever the average profit is, you can set your max take profit in this environment. Max take profit, get me out at $300, get me out at $250. And then there's a concept where we have start to trail stop. And then on version 18, this was a very important function that you can override any of your backtest results. If you say this, it says set break even on partial profit. If you get out of half your profit and you've got it set at a scale out of 50%, for example, it will get you out of half your profit at whatever that hard number is, 300, 500, 400, whatever. Once you've gotten half your profit out, if you want it to trail in case the market goes up forever or trends forever, it will jam and override everything and place a stop on partial on the balance at just slightly above break even. So there's 1 or 2 different answers. So if you're finding, another answer is if you see a profit in the trade and you haven't gotten out, maybe you optimized, and I don't know because I didn't get a lot of data or I didn't get enough information to make a qualified answer. So someone didn't say, here's my settings, and I needed to get a little bit more information. But since it was a general question, I'm going to give a general answer. Without full details to the question, I can't give full details of an answer, but I'll try my best. And the best is, if you want to override and say, I'm only going to be willing to take on a day trade this much profit, get me out no matter what. If you optimized a system for the last year, what is the net changes of average true range we've seen in the market in the E-mini S&P? And this would probably, I'm assuming, be for a day trade, because it wasn't even, the question didn't even tell me if it's a day trade, a stock. It didn't tell me if it's a swing trade. I don't have enough information. So let me try to answer the best question. When you optimize and you look at your performance report and you see that it's an average profit of X amount, then take just that X amount. Also, if you optimize over time, we're going through periods of ATR changes. We've gone from 17 to 24 to 50 to 90. We are seeing unprecedented amount of changes in the market. Define that. I will. Good question. Define that, person. What the hell are you talking about? Well, average true range is something everyone should know about, but this is why we do have a ATR function already built in on your TradeStation platform with the actual range of the market. So currently the E-mini S&Ps, its 10-day ATR is now back down to 32. Historically, it's around 24 to 26 on a 5-year average. We're still slightly elevated in ATRs right now. Typically, bull markets are generally on lower ATR environments. Trend smooth, goes up, like in this period where we had the ES right in that period right there. It was a bull trend. It was nice. And all of a sudden, we go into this wacky and wild period of volatility. And if we go over here and we go right-click and you go to Insert Analysis Technique, well, I don't have to because I already got ATR. It's right here at the bottom. But if you just go and you want to see and backtest visually what average true range is, it's let's see, it's average. It's probably alphabetical, and it is average true range. Click on that, hit OK. I'm not going to do it because I already have it up. So let's take a look at average true range right now. I'm going to format analysis. I'm going to do something unique, which is, let's put it back into scale, shall we? So we're going to scaling, and I'm going to automatic scale based on the data. I'm going to hit OK. I'm going to do the same thing for all of these. Go to format, and I'm going to auto. It defaults, just, it's irritating, I understand, but it is what it is. And that, let's go with the PMC is a relative strength indicator comparing the product to the S&Ps. This is probably, since we're trading E-mini S&Ps, which is the S&Ps, the market catcher tool is not a functioning, very good tool. It's horrible. In fact, you shouldn't use it at all comparing the spiders to the S&Ps, or it's comparing the same market to the same market in relative strength. The only thing is that the S&Ps trade 24 hours, so there might be bigger moves relative to the SPY. I hope I covered that. That's another good question. Person histogram. Let's go and take a look at the person histogram, and we're going to go to format that as well. And we're going to auto range this and hit OK. And we're going to hit close. All right, now, what do we have up here? Forget the PMC indicator because we're looking at futures. All I wanted to do is to share with you, since all the way back in time, this is about the period of normalcy. Back, if you really go back and, like I've done throughout history, and looked at ATR since I think, in fact, it's not, I don't think, I know my very first book, Candlesticks, Pivot Points, the very first one, back in 2004, described where I pay attention to 5, 10, and 20 period ATR. Now I look at, and it's right here. It's just fully disclosed, a 10 period ATR. All right, right there, 10 period ATR. Most times the market in the S&Ps on a 5-year average has been around 24 points. In November of 28 or December of 2018, we went up to about 94 points. That was extremely unreal. So truthfully, if you understand that markets go up very slowly, but markets go down wildly, that's when you see an expansion of ATR is an indication that there's multiple changes of volatility. And so when you see an express change in ATR, it's generally associated with markets going down. When market ATR is going down, it's generally associated with the S&Ps, the stock market, going up. It's one of the only, and I repeat, average true range is not a trend identification tool, except for when it comes to maybe the S&P 500. If you look at crude oil, ATRs expand when crude oil goes up. ATRs expand when crude oil goes down. So crude oil and even gold. So average true range is a condition of what the market is doing on average in a trading range over the last 10 days when you use a 10-day ATR. 5 days if you use a 5-day ATR. So the point that I'm making is, if you go and try to backtest a system in the market, in the S&Ps to day trade, and you're going and you're back testing and you use a period that has more chances or time periods of a 20 to 26 period ATR, you're going to get some unreal results when the market goes through a period of expansion of ATR. And like it did back here in 2018, we went from an expansion from October through December, and that whole period there, we had an increase in ATR. As in the last few weeks, we've also seen an expansion of ATR where we started to break out in December, and then the beginning of the year, we broke out again, and we've made subsequent higher highs and higher lows. As the market in the last week or so has gone up, the ATR, as you can see, the market's gone up, and the ATR has fallen. So the point is that we are seeing fluctuations in ATR like we've not seen either. So we're seeing volatility of volatility. Anyway, this may wreak havoc, and it's kind of like identifying a market dynamic that says if you're day trading a market and you've got these settings that were created for a high ATR environment, it means that your system is looking for bigger profits. And so you might have big profits on the book, but your system won't take it out. So you're going to have to override and know, hey, on average, I only get $500 profit. So if you have $800 profit and all of a sudden your stops aren't going to kick in and you're going to turn an $800 profit into a $200 loss, you got to do something about it. And you do have that functionality several different ways. One, we've just disclosed by setting a hard profit exit. And B, another one is just override the system and exit the trade. Okay. Thanks for the questions. Both we covered were very good questions. Another question that someone asked is that, hey, TradeStation wants me to exit the trade at 3:15 Central. Well, if you're day trading the market, by the way, if you're day trading E-mini S&Ps, you don't have to get out of anything you don't want to as long as you have full margin. If you're using day trade margins to day trade, yes, then you need to get out. 3:15 is like the mini cutoff time. It's like for a couple minutes, and then the market starts to trade until 4 p.m. Central. That's 5 p.m. Eastern. And then for a whole hour, it shuts down. Now, from 5 to 6 o'clock, there's been now in the last 3 years, 4 incidences where there's been an event that occurs in that 1 hour time period. Rocket Man launched a rocket. Something else happened, and I'm live and I'm under pressure to wrap it up, and I got a few more questions I want to cover. But that's the risk that people have, by the way, as a disclosure, is that 5 to 6. So if TradeStation says you got to get out, it's because you're trading under margin. As long as you have initial margin, you can trade whatever you want for as long as you want. If you're day trading and end of exit, end of day, it is not going to let you they're going to want you out by the 3:15 close, and that is a true statement. That I can't help. You have to talk to TradeStation and say, hey, this is what I'm doing, and I'm getting out. We have programmed in version 18, if, by the way, as we say, we format our strategy to get out at exactly on the open of the last bar before the Globex close at 4 o'clock, assuming people are trading with full margin. So if you have a day trade system, by the way, and it's saying get out at the end of the day, an end of day exit, it's going to get you out if you're using a 5-minute bar at 3:55, which is Central Time, of course, or 4:55. It's going to get you out on the open because it can't get you out on the close because the close is the close. So we pre-programmed redefined the close as the open of the last bar of your trading. If it's a 15-minute bar, then you're getting out Central Time at 3:45. That's the open of a 15-minute bar. If you're getting out in Eastern Time would be 4:45. So the open of the last 15-minute bar. Okay? So I hope that was also a new function of what we created in the Algo 17 program, or the 18th release. All right, let's go on to, there was a question about, and this is This page was created for a special class we did called the Razor Focus. We created several different strategies. Let me see where the question was. What is the best to make your algo work more efficiently? What is the best way to work the algo optimizer more efficiently? What's the best way to make the algo optimizer work more efficiently? That's a pretty that's a good one. I would have to say I'm not sure. But in the question as it regards to the Razor Focus, I gave away as a base case study. A base case. Do you know what that means? Base case, everyone? It means here, I started the creation for you. You need to maintain the system. So what's the best way of getting your system? The best thing to do is to maintain it. If you have a car, the best thing to do is to maintain your car. Check your oil, check your air tire pressure, right? You need to maintain things. Same thing with the trading system. The stock market didn't change, the trading hours didn't change, but the condition of how we trade changes. ATRs change. That's what we have to utilize. What I did for Razor Focus is we had a class and I gave everyone this file. My gift to you, I started it for you. What is it? It's a daily system. It's a 60-minute long and short, or long only, excuse me, a 60-minute short only, and a combination of long and short 60-minute. So you had a long only. So if you wanted to be biased and only take longs, this would alert you as an indicator it's long. And it would also have trailing stops. If you wanted to be watchful and watchful of when a market generates a sell signal and would go short, this is the short only model. If you want a system that takes long and short, regardless, I created that model. These were the models that we created for people. How do you make it better? Well, I guess you can. I can't answer that question. The performance is it gets you into trades. The performance since we developed this, when was that class? Last month. It's made another new all-time equity high in the longs. The long only model, again, everyone should have the same damn results. I don't know what you want. How do you make something better? Trade more contracts. I don't know how to answer that question. I love the enthusiasm, but I honestly don't know how to answer that question. How do you make a system better? When you get that answer, you figure it out and send me the email, and I will hug the ground you're on. And that's the age-old question: is how do you program something and make it better? Trading is about risk of loss and about overall performance. No system is 100%. This is actually the short only. And let's look to see what it looks like. I mean, it's not great. It has drawdowns, and it goes back since the last, 5 years? A 60-minute system for the last 5 years. And how many trades has it done? 400 trades, and it's only 50%, and it's made money being short in a market that's a bull market. I'm not sure that's the greatest strategy right there, but relative to longs only, shorts only, that's the difference. And lastly, I wanted to also mention about how do you make a system better? Holding periods, update your holding periods. Markets change from trends to holding periods. This one, you guys remember when we first built this product, we gave 4 workspaces. Bitcoin via GBTC. We gave, and by the way, it's not like it's done very bad. It's Bitcoin, by the way. This is GBTC 60-minute. I guess you could kind of dissect things, but obviously, if you have a short and using it either way, and this is what I wanted to make sure that I teach you, is that whether or not you're taking the trades or not, using a system that it has good performance from a historic standpoint, and that's what this is. The equity curve makes new equity curve highs. That's what that stair step is. The point that I'm trying to make is if it says to be short and it is short, why would you get long? If it's long and you want to go short, why would you sell short? So this actually max barred out, And by understanding, it's ironic. I don't know what to tell you, man. Here's another one. It stops out. It maxed out. Can you tell me how did this work where it maxed its historic trend up and then it went down? I can't answer that. But this is Bitcoin. These are the strategies we've developed with our algo optimizer. So when you ask me, how do I make something better? It's kind of like maintain your system and identify the markets a little more carefully. Not every trade's going to be a winner. I mean, that's the fact. And you're going to have doohickeys. Here's a long. It got stopped out, thank God, on the open. If it had crashed, it would have been a nightmare. Who knows? So there are periods where you will see what's called drawdown, negative performance. This is the equity curve. Obviously, Bitcoin hasn't done a damn thing often since 2017. It's just been kind of, until recently, it's been a dead money product, right? I mean, until recently. And by the way, this is Bitcoin, the GBTC over-the-counter ETF. And this is the original, if I'm not mistaken, double-checking format strategy. This is from 16, one of the originals. We haven't even updated this one here, and it's still firing off trades that are making money. So again, the only other way, when you look at the amount of trades that make money and you say, how can I make more? The only way to make more money is by adding more position, which increases your risk and will increase your position profitability. But again, for every increase of position size increases your risk factor, and you would have to remodify and maintain your strategies. I want to say thank you all for being here. I hope I answered as many questions as thoroughly as possible, which is the design, not to rip through and give BS answers. I want to give clear answers. I also wanted to go through and because there was a question on what the JP McClellan oscillator was about, I think it was important to discuss that, and as well as how can you do certain other things within TradeStation that has to do with your trades. And I think what one has to understand is I don't own TradeStation. I am not a broker. I develop strategies and a product that allows you to continuously maintain a system. One strategy today will not work throughout the annals of time. Why? Because market conditions change. Average true ranges change. It's up to you to modify and maintain your system. And that's what everyone has the ability to do. Change your size, change your risk, override the system. It's all in your power. It's just a matter of me helping you expand your knowledge on how to get better. And that's why we have the PUG meeting once a month, so that you guys can come in and learn and ask questions. No question is a bad question. It's just maybe they're not fully detailed. So we'll try our best to give the best answer. With that said, that concludes our time. Thank you all for being here, and I hope you guys have a great rest of your week, and I'll see you on the next event. Thank you, everyone.